This is a fun time for earnings and disclosures because the big dogs with 100 million or more have to disclose their positions about 40 to 45 days after the quarter. So
yes, and just for clarity here, everything that we talk about, a lot of these guys might not be in by the time. They could report and say, hey, they had this on the books, a month ago, and they have to report it, but now they might be out of that position. Now, we know the portfolio managers, where I give Buffett an example. Buffett doesn't go in and out of stocks, but a lot of the people I wouldn't disclose and wouldn't waste your time on, the algo trading firms that just go in and out constantly of all these stocks because their positions change pretty much on a daily basis, right? But some of these managers, they'll take, small positions and look to build them up over time. And that's what we want to target, where these are guys that aren't going to take small positions and initiate positions and then sell out of those positions 30 days later. These aren't those guys. But it's interesting, right? Because sometimes the reason why I like doing this, Daniel, is a lot of these stocks could be down as they're purchasing them. And a person like Appaloosa, which is David Tepper, or Berkshire, Warren Buffett, that they're going to add to this position over time. And that stock might have gotten hit pretty hard, and it gives you an opportunity to buy in at a lower cost basis than when they got into. It allows you to start looking at stocks and saying, hey, let me research. So what are they seeing? And you know what? This is pretty cool. And maybe 3 months from now, if that thing comes down and I know TEP is behind that's going to be buying the crap out of it, or maybe you have an activist investor that's really going to be busting their balls a little bit and you see that stock come down, it really provides you, because we're always looking for ideas. And also with that, you'll see some ideas where I'll see a symbol of something that comes up on, maybe it's David Einhorn's portfolio. I'm like, what the hell is this? And I'll start looking at it and go, what is this stock? And, it allows you to provide ideas. And I'm always looking for ideas everywhere, wherever they can come. At the end of the day, it's my research. It's my job. But you have to be open to ideas from other people who are brilliant. And you could get into some of these things at much lower prices. And you'll see a lot of times we're getting in before these guys and getting out after them, making better returns than them, which makes me feel really good sometimes. But it's important, 13Fs. I just want to give you that explanation. But they come out pretty much, they're all disclosed around the same time, which is like today, and a lot of them have come out. Daniel, what stood out to you the most?
One of the things at first glance was that a lot of big funds are getting back into your big tech boring names. So I saw Google pop up quite a bit as a new position, even Disney, one of your favorite whipping boys. Mm-hmm. And what I always like to do is the famous ones, Soros, they're big traders. Berkshire's very slow moving. I'd like to pull up some charts and just look at what the stock has done recently and things, and then especially those that are adding to. But when you pull up Disney's and Google's and everybody getting hammered last year in tech and everything going down so much, it doesn't really shock me to see that. It just shows you how, in my opinion, these guys are buying this because, hey, things just got too silly. Markets get move too much in one direction, either the upside or downside. And I thought, man, these guys are probably just enjoying this, Frank. They're going, hey, we don't really have to, we can buy the biggest boring names and, hope for a pop. And that's worked out really well if they've held through anywhere near the first quarter of this year. What I liked is David Einhorn from, let me pull this screen up, Frank. Greenlight.
Mm-hmm.
I had this saved.
He closed out of his position in Intel, News Corp, Rivian. He closed. Yep. He had a position in Rivian, which I always thought was interesting, but small position, but he did close out of it. Okay.
Yep. I had this saved earlier, and I apologize. I don't have it in front of me, but it took him a couple years, but I believe it was David Einhorn who just recently passed his high water mark. And what that means is when you give money to hedge funds, they have a high water mark, meaning they have to get the value of the fund to a certain level. Mm-hmm. And until they reach that, they don't get their performance fees anymore. They still get their maintenance fees and things like that. Every deal is going to be a little different. I'm painting with a broad brush. My point is that he's been a value investor for years and years and years, and it's gotten absolutely smoked up until last year, basically, Frank. But he has made billions of dollars back and kind of surpassed that, which is a big deal. I say all that to say he added to Southwest Gas, SWN. I don't know if you have a chart up there or anything, mm-hmm. but I've seen Southwest Gas. I've seen Carl Icahn talk about this. I don't know if he's still in it, but Einhorn added. He had about
Southwestern Energy, right? SWN.
Yes.
Okay.
He had about 6.1 million shares last filing. Now it's bumped up to almost 9 million shares. If you look at that stock, it's continuing to getting smacked. Mm-hmm. So that goes up on a watch list to think, hey, what's he see here? Let's go through this. They're a huge provider of natural
gas.
Yeah, and it's gotten absolutely
directly tied to natural gas has absolutely collapsed completely. But a lot of stocks, we recommended a natural gas play that has down tremendously as well, because I just think, it's down 70%.
They report earnings this week, by the way.
Yeah, so for me, when I look at this, and look, those earnings aren't going to be good, but that stock's down considerably. But, for me, I think natural gas long term is going to, go a lot higher than what it currently is, and it's, completely it's crashed. And that's when you want to buy a lot of this stuff, right? So, yeah, that's an interesting name. What else did you see?
I liked a couple of Herbalife popped up again. I did like to see Elliott Management is Paul Zinger, who is a amazing cutthroat hedge fund guy. He maintained his position in MPC, which is Marathon Petroleum. He holds about 11 million shares. I think that is a absolute no-brainer. We've talked about that company in the past and refining and stuff. We can go into that more detail some other time. Frank, did you see that Salesforce was another big tech company that a couple of hedge funds, and again, lazily, I think, all right, these guys are just like, listen, these things have gotten beat up so bad. It just seemed like a good trade for a lot of these guys, and it'll be interesting to see how many big tech companies are held in the next 1 or 2 filings. Unfortunately, that means we have to wait 6 months because they do this every quarter, so a couple. But anyway, a couple of the big things. I didn't see anything that I didn't see anybody take a huge position that really startled me, but I haven't gone through all of them yet either, and I've been looking at earnings and things, so bear with me on that.